Imagine the US government has a giant credit card. It uses this card to pay for everything: roads, schools, even soldiers' salaries. Now, imagine that card is maxed out. That's the debt ceiling. It's the limit on how much money the government can borrow. Right now, America has hit its credit limit. The number? A mind-boggling $36.1 trillion. This isn't about new spending. It's about paying for old promises, things agreed upon years ago. Think of it like this. You used your credit card to buy groceries last month. Now the bill is due. Refusing to raise the debt ceiling is like refusing to pay your credit card bill. So what happens when a country as powerful as the US can't pay its bills? The consequences could be catastrophic, sending shockwaves throughout the global economy. This is not a theoretical problem. This is a real and present danger, one that demands immediate attention. The problem isn't just the debt, it's the politicians. Republicans and Democrats are playing a dangerous game of chicken with the American economy. Each side wants to use the debt ceiling as leverage to get what they want. Republicans, controlling the House of Representatives, demand massive spending cuts. They want to slash government programs to reduce the deficit. Democrats, holding a slim majority in the Senate, are pushing for a clean debt ceiling increase. They argue that refusing to pay America's bills is reckless and irresponsible. Caught in the middle are the American people. They are the ones who will suffer if the government defaults on its debt. Jobs will be lost. Retirement savings will dwindle. The cost of borrowing will skyrocket. The political theater is playing with fire, and the stakes are incredibly high. The longer this game of chicken continues, the closer we get to the edge of the cliff. The Treasury Department is using extraordinary measures to keep the government afloat. But these measures are only temporary. The clock is ticking. The critical deadline is fast approaching. This is the day the US Treasury runs out of money, unable to meet its financial obligations. No one knows the exact date, but experts believe it could be as early as May or June. So, what happens when the clock strikes midnight? Let's examine the possible scenarios, each more terrifying than the last. Scenario 1. Kicking the can down the road. This is the most likely outcome. Politicians strike a last-minute deal, extending the debt ceiling for a short period. This avoids immediate disaster but prolongs the uncertainty, leaving markets jittery and investors on edge. Scenario 2. Government shutdown. Remember 2013? Government services grind to a halt. National parks close. Passport offices shut their doors. The economy takes a hit as millions of federal workers are furloughed. Scenario 3. Default. This is the nightmare scenario. The US fails to pay its debts, sending shockwaves through the global financial system. Interest rates soar. The stock market crashes. The dollar plummets. The world plunges into economic chaos. Amid this turmoil, one asset class is being closely watched: Bitcoin. The world's first cryptocurrency, Bitcoin is decentralized, meaning it's not controlled by any government or financial institution. This makes it attractive to investors seeking refuge from the chaos of traditional markets. But Bitcoin is also notoriously volatile. Its price can swing wildly, often driven by speculation and news headlines. So how will Bitcoin react to the US debt ceiling crisis? The bull case. Bitcoin could surge in value as investors flock to safe haven assets. A default would be a catastrophic blow to the US dollar, potentially boosting Bitcoin's appeal as an alternative currency. The bear case. The uncertainty surrounding the debt ceiling could also trigger a Bitcoin sell-off. Investors may panic and dump riskier assets, including cryptocurrencies. A government shutdown could also lead to stricter regulations on crypto, further dampening sentiment. An investor's toolkit for riding the storm. Navigating these choppy waters requires a steady hand and a clear head. Here are some practical tips for investors. Don't panic. Knee-jerk reactions are rarely a good investment strategy. Stay calm and avoid making rash decisions based on fear or speculation. Stay informed. Keep abreast of the latest developments regarding the debt ceiling. Reliable sources of information include financial news outlets, government websites, and reputable financial advisors. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate risk. Consider safe havens. Gold, considered a traditional safe haven, has already started to rise in price. Other options include stablecoins, which are cryptocurrencies pegged to the value of stable assets like the US dollar. Remember your long-term goals. Short-term market fluctuations are inevitable. Don't lose sight of your long-term investment objectives. The 2011 and 2013 echoes lessons learned. This isn't the first time America has flirted with a debt ceiling disaster. In 2011, the standoff between Democrats and Republicans led to the first ever downgrade of the US credit rating. The stock market tumbled and the economy narrowly avoided a recession. In 2013, a government shutdown cost the US economy billions of dollars. Consumer confidence plummeted and economic growth slowed. These near-death experiences should serve as a stark warning. The consequences of inaction are real. The time for political posturing is over. The American people deserve better. Beyond the brink, a call for fiscal sanity. The debt ceiling crisis is not just a political issue. It's a symptom of a much deeper problem, America's addiction to debt. For decades, politicians have kicked the can down the road, borrowing more and more money to fund unsustainable spending. This cycle of borrowing and spending cannot continue indefinitely. Sooner or later, the bill will come due. The US needs a long-term plan to address its fiscal challenges. This will require tough choices and compromises from both sides of the aisle. It's time for our leaders to put aside partisan differences and work together to find a solution. The future of the American economy depends on it. Knowledge is power. Navigating the unknown. The coming months will be crucial for the US economy. The debt ceiling crisis has the potential to trigger a financial earthquake, sending shockwaves throughout the global financial system. By staying informed, diversifying your investments, and keeping a cool head, you can navigate these uncertain times and protect your financial well-being. Remember, knowledge is power. The more you understand about the risks and opportunities presented by the debt ceiling crisis, the better equipped you'll be to make informed investment decisions. If you're enjoying this content and want to stay updated on Bitcoin and financial markets, make sure to hit that like button and subscribe. It really helps the channel grow.